Why is no one talking about this news? Why is no one talking about what I think is probably the biggest news for crypto this year? Why is no one talking about it?
They're sleeping.
They're sleeping. And the news I'm talking about, it's actually not this. It's not this. It's not the fact that Terra is now in number 6 spot and Solana is in number 7. That's not the news. There's other news today, and I think it's like the biggest news of the year, and I'm not sure why the market's not responding. In fact, I know exactly why the market's not responding. The market's not responding because for some reason, Bitcoin is tracking the NASDAQ, and the NASDAQ is down again, and it's down bad. It's down 2.36% again. And that is what caused Bitcoin to go down. So today, we're going to look at why this market is moving down, when it will start moving up, and then we're going to talk about what I think is the biggest news of the year that the market's not responding to. Because, you know, when the market's on this downtrend, nothing can move it, even news like the news we heard today. So let me know in the comments whether you know what the news is. I mean, fuck the NASDAQ. Bitcoin is not a tech stock. It's not tech stock, Wall Street boys. You know, when I read the comments, I'm sure some people in our community are getting wrecked, because if you don't know what this big news is, there's such huge news happening today. You need to know what's going on. You need to know what's going on. Anyway, let's get into it. So before we get into it, first of all, subscribe to the channel and like this content. I know you guys haven't been doing it as much as you guys used to, and that's why the circulation of the videos just keeps going down and down. That, and also because the tourists have left, and the people that are in here now are the people that are really going to make it, really GMI. The people that are here now are GMI, that's for sure. Because interest in crypto is now seriously at an all-time low. People are getting despondent, and I don't blame them for getting despondent, because this market is boring. This market is super boring, and every time we have a pump like the one we had yesterday, we had like a slight recovery pump. Remember, yesterday we went from 38.2 all the way up to 40,290. We did that because the NASDAQ made a recovery. But then today the NASDAQ's back down here, and it's actually getting to like pretty dangerous levels. I mean, if it goes under that level over there, which is 12,969, then that's printing a lower low. I can see Carl here nodding. Carl, that's a real lower low, eh? If that happens.
Yeah, that would be bad.
How bad will that be?
I haven't looked at the left, on the left side, how far where the support is, but it would go down a lot.
Okay, that's not good. Okay, you're also echoing, so get off my stream. So you see, run the sniper, because Sheldon did like the right thing, taking a vacation now and saying, look, I'm going to go chill now, because anyway, nothing's happening on the market. The market's like moving up, moving down. Even huge news like the news that we saw today isn't moving markets. And I was positive yesterday, because what I saw yesterday was I saw the funding rates change. You know, we had 3 days where the funding rates went negative. For those of you who don't know what that means, it means that when the funding rates go negative, it means that people are shorting Bitcoin. When the funding rates go positive, very simplistically put, it means that people are buying Bitcoin long on leverage, right? So that's what the funding rates mean. And yesterday, the funding rates flipped, which means that people were actually starting to get positive for a while. And I think that the reason why the NASDAQ is having such a volatile week, and I think we can expect a much more volatile week, is because of the earnings. So we've got Microsoft earnings, Alphabet earnings, Visa earnings today. We've got a whole lot of other companies, but these are the ones that really matter today. Then you've got tomorrow, Boeing, you've got Facebook tomorrow, Meta earnings tomorrow. I think those will be a disaster. Then on Thursday, you've got Twitter. Thursday is actually the big day. Thursday is the one that counts, because Thursday, you've got Twitter earnings, you've got Apple earnings, you've got Amazon earnings, you've got Roku, you've got Intel. So Thursday is probably the biggest day for NASDAQ earnings. I think we've got to watch out for it. It's going to be a big week, and it's going to be a volatile week. And I think whatever happens on Thursday, if Amazon and Apple deliver on Thursday, then we could finish the week strong, and then we're all in the hands of the Fed. Because the next big market moving thing is the Fed FOMC meeting, which is, I think, on the 4th. I think it's on Wednesday, the 4th. 3rd or 4th. It's on the 4th. So, yeah, it's on Wednesday, the 4th. And then remember, sorry, my earpiece is falling out. Remember that after that, you've got Jerome Powell speaking and giving us guidance. So what happens at the Fed meeting next week is actually not really, it's inconsequential. We know the Fed's increasing interest rates by 50 basis points, or 0.5%. What is going to get interesting after that is how Chairman Powell talks in his guidance. And remember, I want to show you this. Because this is what's going on right now. So you've got the dollar index, a Dixie. So this is the dollar index, and the dollar index is effectively how strong is the dollar relative to a basket of other assets, other currencies. And what you can see is that the dollar is getting really, really, really strong. In fact, I don't remember the last time that the dollar was this strong. Let's go see how long ago was the dollar this strong. I mean, it was momentarily in March 2020 when everyone panicked because of COVID. But I mean, you go back, and I don't remember the dollar being this strong. Here it is. It was in 2017 and 16, and only for a very short period of time, the dollar was this strong. Why is this bad? Because if the dollar gets strong, then all assets relative to the dollar get weak, which makes sense. And if one currency gets strong, then all assets get weak. What we are seeing, though, is that we're seeing that Bitcoin is actually doing okay, because what you would expect is that you'd expect Bitcoin to go down at the same rate that the dollar is going up. The dollar is getting very strong. Why is the dollar getting very strong? Well, because remember that from next month, from May, the Fed is starting quantitative tightening. So the opposite of putting money into the economy, the Fed is going to start taking money out of the economy. And they're going to be taking $95 billion out of the economy per month. That's what they're saying. $95 billion per month taking it out of the economy. So what this guy's saying, he's saying, every time you think that the US dollar may go down, remember that the Fed balance sheet is going to shrink at the rate of $2.2 million per minute. I mean, it sounds scary, but it's actually not that scary. I'll tell you why it's not that scary. Because they're going to be draining $95 billion out the market per month if they stick to this plan of theirs, this plan that they have. But they put in $5 trillion. So you take $5 trillion, you say, okay, $95 billion taking out per month. You put in $5 trillion. Okay, that's going to take you 6 years to get the money out, or 5 years to get the money out. Let's call it 5 years to get the money out, which means that we're going to be here in 2027, and the Fed is still going to be taking this money out the market if they can do it. No, so I don't think that's going to happen. But that's what's going on with the dollar index. What the market's saying is they know that the Fed is going to start taking dollars out of circulation. Dollars are going to become more scarce. Therefore, the price of dollars is starting to go up. And as a result, right now, there's no liquidity in markets. People don't want to invest in risk assets, and there's no liquidity into markets, and it's filtering right into the crypto markets. That's what's going on. So it's very difficult when you have all this big macro stuff going on, and people are pricing Bitcoin as a growth stock. It's very, very, very difficult to get a pump. That's why I think that for the next couple of weeks, we're not going to see a pump. We may get to 45 and we may come back down to 38, but I don't think we're going to see a pump because the Fed has a mandate, and the mandate of the Fed is to manage inflation, and managing inflation in this case means bringing down the markets, getting people to stop spending. So that's where we're at. And until that gets solved, nothing's going to move the markets. Not even what I think was the biggest news of the year. In fact, I don't think it is the biggest news of the year. The news is that Fidelity, which is by far the biggest 401k pension fund manager, retirement plan manager, is now moving to allow the accounts that it manages to invest in Bitcoin and then to expand that into other cryptocurrencies. So listen to this, and then we'll talk about it, because this is by far the biggest news of the year. Don't let anyone tell you that there's been other bigger news of the year. Not even the fact that Luna just eclipsed Solana on CoinGecko. That's not the biggest news of the year. The biggest news of the year is definitely this news.
Bitcoin bull, you might like this news. Fidelity Investments plan to allow investors to put a Bitcoin account in their 401ks, the first major retirement plan provider to do so. It'll be up to employers that use Fidelity to decide whether to put Bitcoin on the menu of options. Under the plan, Fidelity would allow savers to allocate as much as 20% of their retirement savings to Bitcoin. The company expects to expand offerings to other digital assets in the future. The price of Bitcoin right now is $40,493. It had been at $38,000 just yesterday. So maybe moving a little bit on that news. Pretty amazing. I don't know if I want up to 20%, but I imagine employers might control that. I mean, it's A, whether it's on the menu unto itself, and then B, how much you could put in.
It's got a long way.
So first, we're going to look at this news in a few parts. The first part of the news is Fidelity is now allowing employers to add Bitcoin to their 401ks, which means that employees can effectively invest in Bitcoin on their 401ks. For the non-American people, what is a 401k? It's a retirement plan. It's a retirement plan where the employee pays no tax on the money they put into that retirement plan until they retire, and then the tax is almost deferred. So it's like a deduction before tax. And very often what the employers do is whatever the employee contributes, the employer contributes an equal part. Now, Fidelity is one of the biggest managers of retirement plans in the United States. I think, in fact, it's not one of, it is the biggest manager of retirement funds in the United States. You want to get an idea of how big this is? In 2020, retirement plans in the United States were $7 trillion. $7 trillion of retirement plans, of which Fidelity manages, I think they managed in 2020, they managed 2.4 trillion of that $7 trillion in 401k retirement plans. They manage the retirement plans for 23,000 companies in the United States. So think of the 23,000 biggest companies in the United States. They don't manage their pension plans on their own, their 401ks on their own. They outsource it to a company. And the biggest company in the world, or in the US that does that, is Fidelity, managing 2.4 trillion of these 401k assets, estimated. And that was in 2020. And I think probably now it's gone up a hell of a lot. Now, they're going to introduce people allowed to buy Bitcoin. They're going to charge between 0.75 and 0.9% for buying and selling, and they'll hold it in its own custody platform. Now, they're not the first. Fidelity are not the first. There was a company last year, I remember. The company's name, if I remember, it was like a let me just try and find it here. Sure, For Us All partnered with Coinbase to offer BTC exposure in its retirement savings. That was in June 2021. That was kind of like a non-event. More exciting for me is if you look at Fidelity's thinking behind it. They said that we started hearing a growing interest from plan sponsors organically as to how could Bitcoin or digital assets be offered in retirement plans. So what they were saying is that there was a big demand from their customer base to offer 401ks in the retirement plan, Bitcoin in their 401k retirement plan. But this is huge news. This is massive, massive, massive news. And I think that if the market was in bull mode, this would have taken the price of Bitcoin up by $4,000 or $5,000. It was huge. It's huge. So the first company that is already part of Fidelity's plan is obviously MicroStrategy, and they're going to add it. Now remember, the employer has to almost authorize or prove or decide that for that specific company, you can add Bitcoin to the 401k. So Fidelity will offer it as something that's available, and then after that, the employer will have to decide whether or not it's available. And there could be backlash from things like unions and the Labor Department. Listen to this.
Way to go. It is pointed out in some detail with what the Labor Department has issued guidelines that make it very difficult for employers to CYA if they were to do this. It says extreme caution, exercise extreme care before they consider adding a crypto option to 401k plans. If they do so, they could expect regulators to ask questions like, how the hell do your duties of prudence and loyalty with that guidance from the Labor Department, how do you square that?
Well, if
it'd be very, very difficult.
Lose a lot of money in it, you might be on the hook
at
that point for making them whole. And Bitcoin, which is soared, depending on when you got into it, is down, 40% from its highs?
Yep.
So I mean, you're talking about a pretty volatile move. However, this story in the Wall Street Journal does point out just how mainstream this has become. I think Fidelity estimates that there are 80 million U.S. individual investors who own at least some form of a digital currency, and that's pretty significant. Well,
the Labor Department guidance is so, I don't know, prohibitive that Fidelity, along with other trade groups, have written to the Labor Department asking to withdraw that guidance. So I don't know how widespread the adoption could be.
Abigail Johnson, who runs Fidelity, has been she was an early crypto and Bitcoin bull. So she's long. I mean, and she's been running Fidelity. I think they've been wanting to do something like this for a long time. Also,
well,
curious
Fidelity's
to
had
know,
a trading platform for this since 2018, so they did get into this pretty early.
But what the fee structure would be, I imagine it might be a higher fee on buying and selling.
Okay, so there are a couple of hurdles. The Labor Department's going to say, look, if you do this for your company, then maybe that you could be held liable. So I think that there's a lot here. But the one thing that I read, which I think was very good, is what Anthony Scaramucci said. He said that this cannot be underestimated because what Fidelity is about to do is it's about to open huge money coming into Bitcoin. They did that for stocks in the 1980s, and that created a massive stock rally in the 1980s. But stocks aren't fixed supply. Now imagine doing the same thing, unleashing all this new money, but on a fixed supply asset, a really fixed supply asset. I don't think in the history of the world that anything like this has ever happened. And we're talking, I mean, I think this is absolutely huge. And there's been some real feedback about it. So Barry Silbert obviously saying, we're getting all of this, but still we're not getting a Bitcoin ETF. And I think now I think the SEC is really starting to look stupid. If they don't approve a Bitcoin ETF this year, I would be very, very surprised. And I'd be very surprised if I didn't approve an ETF before the November midterm elections. I think that with the economy the way it is, and with quantitative tightening, and with people starting to suffer, they need some good news. We need some good news. And the SEC is starting to run out of excuses. Especially, I mean, we said that there was an Australian ETF which was supposed to be launched. That was delayed. It was supposed to be launched tomorrow. And we thought that could easily bring in $1 billion into crypto. That's been postponed. Let's just look at how these 401k monies are currently allocated. And just look at the size of potentially how big this market is. So if you look at the average age and the average 401k account balance, you're talking about obviously when people are younger, they have less in their accounts, and as they get older, they have more in their accounts, and that's the average numbers that are in there. But let's look at how it is currently allocated. So 39% of it goes into equities, 26.6 goes into target date funds, which I think are fixed income funds, and you got a breakdown of how all the assets here are spent. Now, imagine that we just get, I don't know, 2% of this pie, 5% of this pie into crypto. Talking about 5% of $7 trillion. I mean, that is serious, serious, serious money. So that's the size of the opportunity. And I think Fidelity has today opened up this huge opportunity for crypto investors. And I think on a normal day, this would have driven the market up by $5,000. We would have got an increase in Bitcoin today. But we didn't, because we're living in the most boring market in the whole world. Let's talk about the story of my shirt. I mean, everybody knows the story. You've all definitely heard it because you guys are all degens, and degens have been paying attention on Twitter about the Twitter news. So if you follow my account on Twitter, you would have seen it yesterday. I posted a tweet as soon as it happened. Elon Musk now buying Twitter, taking Twitter private, $54.20 per share. He did this through raising finance. We'll talk about the raising of the finance because I think that's something that people aren't talking about. I think the more important thing is the reactions of certain players in the ecosystem to the Twitter news. So the news is the news. More important for me, the more fun is the reaction. So let's look at what the reactions were of people. So the first one is Jack, who is the current, he's the outgoing CEO. He owned 1 or 2% of Twitter. I think he gave 1% away, and he left. He's the iconic, in inverted commas, founder, because I don't think he was the founder, but he left. And he posted this, he said, everything, it's a song by radio, it's everything in its right place. I love Twitter. Twitter is the closest thing we've had to global consciousness. The idea and service is all that matters to me, and I will do whatever it takes to protect both. Twitter as a company has always been my sole issue and my biggest regret. It has been owned by Wall Street, and the ad model, taking it back from Wall Street, is the correct first step. In principle, I don't believe anyone should own or run Twitter. It wants to be a public good at protocol level, not a company. Solving the problem of it being a company over Elon is the singular solution that I trust. I trust his mission to extend the light of consciousness. So Elon's goal of creating a platform is maximally trusted and broadly inclusive is the right one. This is also Parag's goal. Yeah, right. And why I chose him. Thank you both for getting the company out of the impossible situation. This is the right path. I believe it all my heart. I'm so happy Twitter will continue to serve the public conversation around the world and into the stars. Okay, bullshit. So, I mean, I think we'll actually see Jack back on the Twitter board. I think he hated life at Twitter. I think he hated the fact that he was under this. Jack is a Bitcoin guy. He's a liberalist. He loves free speech. But I think he was confined by the board. So that's Jack's response, Jack's reaction. Then, I mean, worth listening to what they said on Squawk.
One of our top stories today, Twitter's board unanimously approving Elon Musk's $44 billion.
Unanimously. This is the same board that gave Elon Musk the poison pill. So look out for the results this week, because I think the results are going to be so shit that the board had to do an about turn and unanimously agree. Unanimously. This is the same board that didn't unanimously agree last week.
$1 billion offer for the social media company. Julia Borston joins us right now with what's next for Twitter and the rest of the ad-supported social players. Julia, good morning.
Well, Becky, there are still plenty of unknowns about what Twitter is going to look like and who will lead the company. And CEO Parag Agrawal reportedly told his employees yesterday that once the deal closes, quote, we don't know which direction the platform will go.
We know that Parag is out as soon as Elon takes over Twitter. We know that for sure. He says he doesn't know, but actually I think he does know.
But
Parag's
what we do know is that Musk has said he is focused on free speech and making the platform an open global town square. In addition to plenty of talk about an edit button, Musk says he wants to make Twitter's algorithm open source to make transparent the ranking of tweets. He's also said he wants to authenticate more users and remove spam bots. He could also enable longer form tweets, and to push for unfettered free speech, he could remove content moderation other than what is legally required in different countries. Now, then there's also the question of what happens with Twitter's business model. Musk has praised Twitter's nascent subscription offerings, and in a since deleted tweet, he warned, quote, the power of corporations to dictate policy is greatly enhanced if Twitter depends on advertising money to survive. If Musk does reduce content moderation and content feels more risky, analysts expect that will make brands less willing to spend to put ads on the platform. Truist Yusuf Squali saying that Twitter's advertisers are likely to move to platforms like Facebook, YouTube, and Snap, with Facebook probably the biggest beneficiary. Jefferies analyst Brent Thale says he expects some of those dollars to shift into digital ad companies, including Hulu, Pluto, and Amazon Fire TV for those targeted digital video ads.
Do you get the subtlety?
Of course, there's still so many unknowns about how much.
Do you get the subtlety of what's going on there? They're basically saying that if Twitter becomes a free speech platform, then advertisers may be reluctant to spend money on Twitter. So what they're saying is, look, if the speech is controlled, advertisers will advertise. But if the speech is not controlled, then advertisers won't advertise. In other words, what they're saying is politics is going to dictate everything. And if the politicians decide that there's too much free speech there and you advertise there, then the politicians may be hostile towards you. So you did hear that subtlety. I know you guys heard it. So that's the second thing. So Parag's gone. I mean, he knows this. He says Twitter has a purpose and relevance that impacts the entire world. Deeply proud of our teams and inspired by the work that has never been more important. Okay, bro. That was basically the shortest CEO stint in history. You're gone. Okay, now the Biden administration is also coming out. Listen, now we're getting all the responses. I told you, the responses is what's important here.
General has said that misinformation about COVID amounts to a public health crisis. Yeah. I'm wondering, regardless of ownership, would the White House be interested in working with Twitter like it has in the past to continue to combat this kind of misinformation? Or are we in a different part of the pandemic where that kind of partnership is no longer necessary?
Well, I think we engage regularly with all social media platforms about steps that can be taken. That has continued, and I'm sure it will continue. But there are also reforms that we think Congress could take, and we would support taking, including reforming Section 230, enacting antitrust reforms, requiring more transparency. And the president is encouraged by the bipartisan support for or engagement in those efforts.
So you see the White House now saying that they will take steps to combat misinformation on social media. That's exactly what Elon did. Elon took steps to combat misinformation on social media. The White House should be saying that they want to take steps to control information on social media. Then you had Peter Schiff. I mean, Peter Schiff's not stupid. He's just stubborn. He's not stupid. He says Elon Musk is actually buying Twitter. The smart move is to sell Tesla stock, because what he says is Elon Musk took leverage against his Twitter stock to buy against his Tesla stock to buy Twitter. That's the interesting part. So what does it mean? If Elon takes $25 billion in financial debt at an average interest rate of 4.5% to 5% a year, which is what you do get on commercial interest rate loans, it means that Twitter has to pay between 1.15 and 1.3 billion a year in interest alone. That's interesting. That is interesting. Even though Elon Musk says this is not a money-making venture for him, he's not looking at the money, it is quite interesting. So that's another view to look at.
You own all of Twitter or Facebook or what have you. You don't have to explain yourself. You don't even have to be transparent. You could secretly ban one party's candidate or all of its candidates, all of its nominees, or you could just secretly turn down the reach of their stuff and turn up the reach of something else. And the rest of us might not even find out about it till after the election. Elon Musk says this is all to help people because he is just a free speech, philosophically clear, open-minded helper. You own all of Twitter or Facebook.
So, I mean, there are some skeptics about this, and about the richest man in the world owning the public square, now the public town hall. And I think it's pretty justified, because Twitter you can win and lose elections because of your access to Twitter and the community on Twitter. That's been something that's spoken about a lot. And if you look at it now, and you look at the world rich list, okay, so you look at the world rich list, and you look at like the richest people in the world. So you got Jeff Bezos at number 1. Now, obviously, Elon Musk is higher than him. Number 2 is Elon Musk. Number 3, Zuck. Number 4, Bill Gates. Number 5, Larry Page. Number 6, Sergey Brin. Then Larry Ellison. Then Buffett. Then Steve Ballmer from Microsoft, and so on and so forth. And then number 10, Bloomberg. And then you go, hold on a second. Hold on. The richest guy in the world is Elon. He owns Twitter. Second richest guy is Jeff Bezos. He owns Washington Post. Then the number 2 guy, number 1, switch. Number 3 guy owns Facebook. Number 5 and 6 started Google. Number 4 and 9 started Microsoft. And the number 10 owns Bloomberg. So you do have all the richest people in the world, the most influential people in the world, the richest people in the world, now really owning all the media platforms in the world. That really shows the power of media. The richest people in the world own the biggest media platforms in the world. That's not a coincidence. That is not a coincidence. That is the richest people in the world controlling the narrative. So, listen, I love Elon. I think as much as I don't want to lose 95% of my Twitter following, which I think is inevitable because they're all bots, I think I'm about to lose 95% of my Twitter followers. But I still support Elon's plan. I think Elon's plan is genius. Let him get rid of the bots. Let him verify everybody. Everybody deserves to get a blue tick. If you're a human being, you need to get a blue tick. Poor Kyle. There's some guy impersonating Kyle on Twitter. The guy's got more followers than Kyle. Did you get the email that I sent you from Twitter to confirm your identity and everything? You must fill it in. You must send it in. Kyle's got what's it called? Account that's impersonating him on Twitter, and it's got more followers than him. Look, the content from the impersonator's account is much more interesting. I must be honest.
Yeah, they retweets. They're brilliant.
I'm pulling Kyle's leg. All right, let's talk about altcoins. I know you guys didn't come here to look pretty. You want to talk about altcoins? Let's talk about altcoins. I think with altcoins, you see, everyone here has now pumped Kyle to 100,000 followers so that he can beat the impersonator account, Kyle. That's anyway, guys, go and follow. Is it Kyle Doops?
Yeah.
At Kyle Doops. Follow at Kyle Doops. Then we can pump Kyle's Twitter. Then he can have more followers. Let's have a race between you and your impersonator to see who's got more followers. He's ahead, boy. He's ahead. All right, let's talk about altcoins. That's why you guys came here. You didn't come here for the popcorn. You didn't come here for my striking good looks. You came here to talk about altcoins. I think the altcoin we must discuss is Luna, which is now firmly in the number 6 spot behind Solana. Somehow, I mean, you got to question the state of the crypto market when number 8 is XRP.
We just need to win the case. BitBoy said it's going to $10.
Yeah, BitBoy says that because he doesn't. He's getting all. He needs followers, so he's going to the XRP community. You want followers? You go to the XRP community. Say nice things about. Put XRP on the tile tomorrow. You'll see we'll have the biggest show ever, and that's what BitBoy does. Okay, so hey, Carl Doops got duped. Okay, so let's talk about Luna, because that is the token that has actually performed the best this year out of all the major altcoins, right? So you look at all the major altcoins, you can see that Luna is up now more than 2.9% this year. And you compare it to the other tokens. The other tokens aren't doing so good. Like Bitcoin's down 17%, Luna and Near down only 7%. We're going to talk about that in a second. ETH 22%. It has been a brutal year for crypto, and we've been part of a 6-month bear cycle already. So you're already 6 months into it. There is some news around Luna, which is amazing. So Fireblocks is a massive centralized custodian for individuals and for institutions. They're saying that they saw a $500 million stampede into Terra DeFi, which is huge. So the CEO, he says, it's been including crypto hedge funds, venture capital firms, and high net worth individuals. Once we released the capability to access DeFi on Terra, we've seen this kind of crazy demand. 250 million was deployed in the first 72 hours. So that's huge news. You can see that institutions and high net worth individuals who are looking for a safe solution are going into custody, and now they opened up custody on Terra and they had huge demand. Why? Because they all want to go into Anchor Protocol. Why do they want to go into Anchor Protocol? So they can get 20% return, whatever the number is until they start 19.47% return, right? That's why they're there. But Terra has a yield reserve. So you remember this yield reserve. This is that $450 million that Kwon and the Luna Foundation deposited into Terra. They deposited on the 10th of Feb. So 10th of Feb to 10th of March, 10th of March to 10th of April, call it 2.5 months. We're 2.5 months in, and they've already burnt $250 million of this yield reserve, which means that they're paying out more yield than they're earning. And there is this tweet that says that there's about 50 days left in the Anchor yield reserve at the current rates. Okay, so that's quite scary. There's 50 days left at the current rates, and then the yield reserve finishes. And when the yield reserve finishes, there could be less of a demand for people to be going into Terra, because they're not getting this guaranteed 19.5% return. And in May, remember, the 19.5% drops by 1.5%. In June, it drops again by 1.5% until we can get some kind of equilibrium there. But the interesting thing is that Kwon responded to this, and he says, how much? He says, might be reasonable to have another top-up, facilitate a smooth implementation of Anchor semi-dynamic rate. Okay. Guy says, well, if it happens, we might see a 10-figure, $1 billion. And Kwon says, sounds low. So you got like Kwon saying, is he saying sounds low to the 50 days? Or is he saying that $1 billion sounds low?
1 billion.
You think he's saying 1 billion?
That's how I read it.
That's how I read it. But they can't keep funding. They can't keep funding this. They can't just keep artificially injecting capital, printing money out of Terra, out of the tokens that they've got, and then just keep pumping this printed money, this unbacked printed money into Anchor Protocol to keep wooing people. I don't think that's something that can continue forever. The system has to start running on its own. And that is what Near Protocol have done. So Near Protocol Remember we said they were going to come out with their own stablecoin and that they were going to offer a 20% return? Well, they did come out, but they came out without the 20% return. They came out with a 10% return. So how it works is, if you want to mint USN, which is the algorithmic stablecoin on NEAR protocol, then you have to stake NEAR. And for every dollar worth of NEAR that you've got staked, you can mint 1 USN. And then what they do is they take your NEAR and they stake your NEAR, and they get 11% staking rewards on the NEAR, and then you get paid a 10 or 11% return on your USN. So UST 20% return or 19.5% return, reducing by 1.5% a month from May. And now USN came on with 10%. As I said, USN will generate 10% based on the staking of NEAR. But if the price of NEAR goes up, then they will be able to pay more yield. My question is, what happens when the price of NEAR goes down? If NEAR collapses completely, then all of a sudden you've got 1 USD backed by what was 1 USD worth of NEAR, and then all of a sudden the price of NEAR halves, and then you've got it backed by half. And for that, they've got a reserve. But is that reserve enough? I don't know if that reserve is enough. I don't know if that reserve is going to be enough. So watch that one. I think regardless, I think at this point, you should be looking at the NEAR ecosystem. I don't think that we should be looking at NEAR. I think we may have missed the boat on NEAR. Maybe we haven't missed the boat, but I don't think you're going to get rich on NEAR. NEAR already has a fully diluted valuation of, it's got a 9 billion valuation with a 13.9 billion fully diluted. So you're not going to get rich on NEAR, but you may actually make money on the NEAR ecosystem. And there's a whole ecosystem that's developing. I spoke about Rev Finance. You've got Burrow Finance. You've got all the NEAR protocol tokens that are launching. So let's quickly look at it. So I think now you've got to start looking at NEAR protocol. You've got to start looking at what they're doing and start looking at the projects. And if you get the right project specifically now, because you may be able to get them at the right price, then NEAR protocol is probably a good place to be. All right, quickly, what else is there? We do have another hack, another Bored Ape Yacht Club hack. Again, taking over the Instagram this time, where apparently there was 2FA enabled and telling people that they could mint. You connected your wallet and bang, your ape was gone. $13 million have been taken. You can follow the address here. You can just click on ERC 721. You can follow all the address. You can see all the NFTs that were drained out of these accounts. I mean, what a shame. What a pity. What a pity. Alrighty. Last thing before we go, should we double someone's portfolio? Let's double some people's portfolio today. Remember how this works is you go, actually no, where's Hustle's not on today. Oh, you go to ByBit, there's a referral link below. You open an account with the Crypto Banter referral link. Don't open an account without the Crypto Banter referral link. And every day we're going to double someone's portfolio, and we'll 5x someone's portfolio today. So account number 100 is going to be the one that's going to be 5x'd up to $1,000, up to $10,000, up to $5,000 on the 5x. And these guys are going to be doubled up to $10,000. So let's do 2 accounts. We'll double them. Remember, this could be you. Just go open a ByBit account. It's so simple. Deposit money. Don't have to trade. You don't have to do anything else. And let's see what these guys are on. Remember, it's rows 100. Let's see. Oh! $981 got 5x'd. Nice. 2743833. He got $981, 5x. That's close to $5,000. Then the other account gets 0. We can 100x that account.
Give him $1 million.
Yeah, I'm going to 100x him. You get 100x. And the other guy gets 33. He gets 2x. So 2x your account. So those are the winners. Remember, you could be a winner. All you need to do to be a winner is sign up with the referral link below. It's that easy.
You can post on Twitter that you 100x someone's account.
100x someone's account on 0.
Amazing.
Yeah. All right, guys, I will probably see you tomorrow. So tomorrow is a holiday here in South Africa. We're going to wake up, see what's going on in the markets. If there's action, we'll be here. If there's no action, I'm going to take the day off and spend the day with my kids, my new daughter. If there is action, we'll be here. That I promise you. Until then, so I'll see you tomorrow. Or if I don't see you tomorrow, I'll see you Thursday. Until then, have fun. Trade well, my friends.